I'm Prince Dykes. This is the Royal Financial Investment Group. Today is going to be our weekly recap that we do every week. About every Sunday or Monday, every weekly recap come out. Well, we're going to discuss the week prior. Here, I'm doing something different this week. This is the first time I'm not going to do an actual video per se of showing my face of me talking in front of the camera. I'm actually going to do the audio route, and let me know if you guys prefer the audio versus the video. I'm going the video route, so this is something to where you can just hit the play button and just sit back and just listen while you're doing whatever you got to do and taking the information I'm putting out. So don't forget that this is a place that you can come and ask your questions, whether it be IRAs or mutual funds or limit orders, how to do things on E-Trade, custom charts, anything you want to ask, an idea of a stock and stuff like that. This is where I will discuss those things. So feel free, send in your information and what you want to see me discuss. So pretty busy week this week, up and down week for myself. Follow us on the Facebook page, facebook.com/Royal Financial Group. That's a good page for you to go into and follow us, what we do every day. So, well, not every day, but daily when we pick our daily picks. So mostly we've been doing calls and puts. So we're just going to recap the week. We're going to talk about what we did. So big winner for this week, very big winner for this week was actually Apple. Apple was definitely a big winner for this week. Apple rose up 8% after his earnings came out. Like I said the week prior, this week here was a big earnings week. Amazon, Apple, Microsoft, a ton of big companies came out this week. I can't recall all of them at this particular time, but a lot of companies came out this week with their earnings. And we all know that earnings are a very big momentum shifter in a stock, depending on, especially if it's a Fortune 500 company. Another one, Facebook. Facebook came out with its earnings. Amazon came out with its earnings. Apple came out with its earnings. And when I tell people about earnings is like a 50-50 hit or miss. It's a 50-50 risk. You can be right and you can be wrong. You can say, hey, I think this is going to be good and it's going to be bad. And usually it's not about if the earnings are good. It's about how does Wall Street or how does investors interpret those earnings. The earnings could show growth. It could show gains. It can beat analyst expectation, but still have an adverse effect on the stock. So it's really how people interpret the reports. For example, let's look at Amazon. Amazon met and actually beat analyst expectation a little bit, but the stock still dropped. Why is that? Investors looked at the earnings and said, well, if they had a concern over would Amazon be able to keep up with the rising cost of technology, even though Amazon had a great earnings, that they did great, had a great season, but then it said, hey, investors like, well, can they keep up with the rising cost of technology? And it cost a 9% drop in the stock. So let's do a weekly recap here of the positions that I made. So Visa was another company as well. I can't remember all the companies in detail, but you can go back on my Facebook page and we're going to go into, you can go back on my Facebook page and see which ones I was actually talking about, but I'm going to turn it into this week. So this week began I'm actually fixing up my computer here to actually show me here what happened. The 19th. Okay. So, 21st. Okay. So this week, the big gainers were Apple, Amazon, JCPenney, and also I did Amazon again, calls and puts. So what I did was on Amazon, I had puts on Amazon in the beginning, which I should have kept. I had puts on Amazon. I had puts on Apple for a day, which Apple dropped. and then I turned around and brought calls on Apple right before the earnings came out. And my reason for buying calls on Apple, no, I did not know about the shares being split by 7 points, not 7 points, but a 1-to-7 share split. I didn't know anything about that. I didn't know how strong the earnings were going to be. But what I did notice was that in the last quarter's earnings, Apple failed to meet Wall Street's expectation. It just came off the Christmas holidays. Everybody had high expectations of Apple, and it didn't meet it. So when earnings reports come out, they project what they're going to do the next month. So also, analysts was upset with what they said they was projecting to do for the next month. They said, hey, we thought it was going to be a whole lot better than this. So that made the stock tumble. I had calls on Apple at the time, so I lost on that transaction. So now that I know the bar was set low, I kind of figured that they will jump over the bar very easily come the next quarter, which they did. You know, Apple had a lot of great, the expectations was low, and Apple beat them in every type of way. Stock rose 8-9%. That itself on my contract gave me about 100 and something return within hours. So that was a big winner. I had JCPenney calls for a while. JCPenney has been tumbling on down, and I figured that it would be ready for a bounce. JCPenney had like a 8% return this week. I caught it at the bottom, was able to take advantage of JCPenney's turnaround. Visa is something that I had puts on for a while, and it has been burning me. Verizon, not Verizon, but Visa was going up, and which was going against me since I had puts on them. So I noticed that. I said, well, they have earnings coming out next Thursday. Let's see how their earnings go. Because I was about to just say, hey, take the loss and move on. But I said, hey, let's wait till earnings come. Earnings came around. Earnings went bad. And Visa dropped about 5%. So Visa dropped 5%. That played directly into my hand, which made me a happy man. And even though I haven't closed that transaction yet, because I think it still has a little dropping to do, and now it is playing back into my direction. I haven't turned it into a complete profit yet, but I have so far taken back some of the losses that I have accumulated with Visa going up. So another one was Amazon. I turned around and brought Amazon calls for earnings. I thought Amazon would also exceed its expectations because of the bar being set low, which Amazon did. But the way Wall Street interpreted Amazon's earnings, it didn't go well. Amazon tumbled on me, and I have calls. So now you're going to be able to see I have two losing trades I'm holding right now, Amazon and Visa. Visa is starting to play in my direction because of earnings came out on Thursday. So it's starting to play back into my direction. Amazon is also, I'm going to show you guys how I try to turn a losing trade into a winning trade, or at least absorb some of that loss. So Visa is starting to come back into my direction, and Amazon as well. So that's pretty much the transactions that I made throughout the week. Another one is, on Friday, I made the purchase of Twitter. Twitter will be coming out on Twitter earnings are coming out on Tuesday. Right now, I have calls on Twitter. I don't know what I will keep Twitter. I will see on Monday how Twitter acts. If Twitter is bullish on Monday, then I may jump in and get calls. If Twitter is bearish on Monday, if Twitter is bullish on Monday. If it's bullish on Monday, which means it's going up. If it's going up on Monday, I already have calls on it. I probably end up selling it and taking a profit. I'm not going to play earnings. But if Twitter is bullish on Monday, then I'll probably jump in and play the earnings. So earnings are 50% unless you know something that's better. Now there's all different type of spread strategies that are out there for option trading. Option trading, I'm getting into the spread categories myself. So I'm getting into the spreads itself to see how spreads work and things like that. So it's different type of butterflies, condors, iron condor, all type of good stuff that you can do, strangles and straddles to benefit off of market volatility depending on where the market goes. So that's one thing. That's the weekly recap. Now I want to get into the topic of why do people invest and why they should invest. Recently here, thank you guys for coming to the Facebook page and growing the Facebook page to what it is now. Over 475 likes right now. Trying to get to that goal of 500. Thank you guys for coming to YouTube and hitting that subscribe button. That's over 492 subscribers right now. We want to get both Facebook and YouTube up to 500 subscribers each. 500 subscribers, 500 likes. We're currently developing that website, and we're currently taking classes ourselves. So I want to thank you guys for all your continued support, and I ask that you continue to support and share as we travel down this journey. Another thing is, I spoke about, like you can see on my company's Facebook page, I wrote an article about Michael Jordan versus the Nike stock. I know that a lot of people, a lot of kids, a lot of parents love Nike. They love what Nike has to offer. They love Jordans. The kids love Jordans. And they'll stand in line. They'll special order. They'll go to the extreme measures to make sure their kids get those shoes, which is a great thing. I think that every parent should be able to provide for the kids, and the kids should have what they want. I understand that. But also we have to have a different mindset of assets and liabilities. Those shoes are not going to make you any money, what I'm saying. And I see people with closets and closets full of shoes. And I'm not telling anybody don't buy shoes. That's great. But what I'm saying is there has to be some type of balance. There has to be, okay, instead of me owning 30 pair of Jordans, instead of me going ahead and buying 30 pair of Jordan shoes, how about I buy 10 or 15 pair of Jordans, and with the rest of the money, I'm just going to invest it in some type of way in something that can actually earn me money. I wrote an article that I did the research on because I noticed people like Jordans. I did the research. Michael Jordan's first sneaker came out in 1985 for $65. That's what it sold at Foot Locker. Sold out immediately, long lines, all this other good stuff. At that particular time, Nike stock was trading for 25 cents. So one pair of shoes at the Jordans at that time cost $65. Had a person just said, hey, instead of me buying these shoes, or instead of me buying 3 or 4 pair, I'm going to take $65. I'm going to buy Nike stock, since I noticed that people love this. And if that person would have done that with $65, as of today, that $65 be worth over 20 grand. Just off of $65 alone. That is the mindset that I'm targeting at, and that I'm talking about, is that, we have to look at things a little bit differently of what's going to happen and what's going on. So that's just something to think about. Everybody wants something. Everybody needs something. Everybody likes to have something, but you have to look at things in a different perspective of, is this going to make me money, or is it going to cost me money? Now, those same tennis shoes that somebody brought back in 1985, I'm pretty sure a year or two from then, those shoes were thrown into the trash or whatever, lost. Nobody knows where they're at. But the people who invested into the Nike company and the Nike brand, they're the ones who make out. Even after Michael Jordan is gone, they signed Kevin Durant, they signed LeBron James. They keep re-innovating themselves. The brand will be, the Nike brand will outlive any athlete. I know you think LeBron is the best thing right now, but LeBron's it's going to only be able to play but for so long before he himself is going out. But Nike will still be around, and Nike will then join the next hot superstar. That's capitalism. And it's that we have to learn how to play capitalism and just say, hey, my son wants these shoes. Instead of me buying him all these toys that he's going to throw away and that is going to be ending up at yard sales in the trash can, let me take a little bit. My son wants the iPad. He wants a MacBook or whatever. Hey, instead of me buying him all these Apple products and gadgets and iPods and all this other good stuff, how about I buy him Apple stock? Apple stock is something you can pass down and own for years and years and years and pass down to your kids and make money for a long period of time. Versus those toys and those electronics, those things are going to slowly depreciate in value over time. This is why the rich get richer and the poor gets poorer. Because the rich currently, they use things and they spend their money on assets, things that can make their money over time versus liabilities. The lower class and the middle class, they take their money and they buy liabilities, not assets. And liabilities lose money over time. I buy all these clothes from Express. These clothes are going to lose value every day that I have them. If I buy stock in Express, it has the potential to appreciate and go up in value over time. And this is something I can own forever and I can pass down to my son. So the share owners are earning money while the consumers are losing money. Just something to think about. I'm not going to keep you guys for too long. I hope you guys took something out of the message. Don't forget to inbox me, write me if you want me to discuss the video. And thank you guys. Have a nice day.